Listen, something extraordinary is happening in the precious metals market right now, and most people have absolutely no idea. While everyone's distracted by the latest headlines, a massive shift is taking place that could redefine wealth for an entire generation. And here's the thing, this window won't stay open much longer. Silver just hit levels we haven't seen in decades. We're talking about a 76% surge in a single year. Gold's been breaking records left and right. But this isn't just about prices going up. This is about a fundamental restructuring of the global financial system. And the smart money has already positioned themselves. The question is, are you going to be on the right side of this? Or are you going to look back in a few years wondering what happened? Let me paint you a picture of what's really going on here. Central banks around the world are buying gold at a pace we've never witnessed before. Not just buying, hoarding. They're pulling physical metal off the market like their lives depend on it. And maybe they do. Because when central banks move in unison like this, they know something. They see something coming that the average person doesn't. Think about it. These are the same institutions that print money, that control interest rates, that supposedly have everything under control. Yet they're scrambling to accumulate as much gold as they possibly can. What does that tell you about their confidence in the paper currency system they've created? Here's where it gets really interesting. Silver's industrial demand has exploded. We're not just talking about jewelry and coins anymore. Every solar panel, every electric vehicle, every 5G tower, they all need silver, and lots of it. The green energy revolution everyone's talking about, it runs on silver. The technology boom, silver. The electrification of everything, you guessed it, silver. But here's the kicker. Silver mine production has been declining. We're pulling less out of the ground every single year, while demand keeps climbing. It's basic economics, right? When supply goes down and demand goes up, prices have to rise. But silver's been suppressed for so long that most people don't realize we're sitting on a powder keg. Let me tell you about what happened in the late 70s and early 80s. Silver went from around $5 an ounce to $50 in just a couple of years. People who understood what was happening made fortunes. Those who didn't, they watched from the sidelines, kicking themselves for not paying attention to the warning signs. And the warning signs were everywhere, just like they are now. Inflation was running hot. The dollar was losing purchasing power. People were losing faith in paper currency. Sound familiar? Because we're living through a very similar moment right now, except this time the stakes are even higher. The difference between then and now is the scale. Back then, it was primarily about inflation and monetary policy in one country. Today, we're watching the entire global financial system shift. Countries are moving away from the dollar. They're settling trade in their own currencies. They're building alternative payment systems. And they're backing it all with gold. The BRICS nations, Brazil, Russia, India, China, South Africa, they're not just talking about alternatives to the dollar anymore. They're building them. They're creating infrastructure. They're signing agreements. And every single one of these countries has been accumulating massive amounts of gold. This isn't speculation. This is documented fact. China's been particularly aggressive. For years, they've been buying gold quietly, consistently, relentlessly. They're not doing this for fun. They're doing it because they understand that in the new financial system being built, gold is going to be the foundation, and they want to make sure they have as much of that foundation as possible. Now let's talk about what's happening in the physical market versus the paper market. This is crucial to understand. On the COMEX, the major commodities exchange, there are massive amounts of paper contracts for gold and silver. These are essentially IOUs, promises to deliver metal. But here's the problem. There's way more paper than there is actual physical metal to back it up. It's like a game of musical chairs, except when the music stops, there aren't going to be enough chairs for everyone. And the people who are holding paper, they're going to be left standing. The people who own physical metal, they're going to be sitting pretty. We've already seen cracks in this system. There have been moments when the spread between paper prices and physical prices widened dramatically, times when you couldn't actually buy physical metal at the paper price because there simply wasn't any available. These are warning signs that the system is under stress, and that stress is building. Every day, more people are waking up to what's happening. Every day, more investors are moving from paper to physical. Every day, the available supply of physical metal shrinks a little bit more. This can't continue indefinitely. Something has to give. Let me share something with you that most people don't think about. When you look at the total value of all the gold ever mined in human history, It's a surprisingly small number compared to the total amount of currency and debt in the world. If you tried to back even a fraction of the global money supply with gold at current prices, the math doesn't work. The price would have to be multiples higher. Now, I'm not saying we're going back to a full gold standard tomorrow, but I am saying that as confidence in fiat currencies erodes, as debt levels become unsustainable, as inflation continues to eat away at purchasing power, people are going to increasingly turn to real assets, and gold and silver are the ultimate real assets. Here's something else to consider. Throughout all of human history, gold and silver have been money, not for decades, not for centuries, for millennia. Every paper currency that's ever been created has eventually failed. Every single one. The dollar, the euro, the yen, they're all just the latest experiments in paper money. And history suggests they'll meet the same fate as all the others. But gold has survived every empire, every economic system, every financial crisis. It's survived because it has intrinsic value. You can't print more of it. You can't devalue it with a keystroke. It is what it is. A finite, tangible store of value that's been recognized as such for thousands of years. Silver has that same quality, but with an added dimension. It's not just a monetary metal, it's an industrial metal, which means it gets consumed. When silver goes into a solar panel or an electronic device, it's gone. It's not coming back. This creates a unique dynamic where silver is both a store of value and a consumable commodity. Think about the implications of that. As the world electrifies, as we build out renewable energy infrastructure, as technology advances, we're going to need more and more silver. But we're mining less and less. And the above-ground stockpiles that existed decades ago, they've been largely depleted. We're heading toward a supply crisis, and most people have no idea it's coming. Now let me talk about something that's relevant to a lot of people watching this. If you've built up retirement savings, if you have money in a 401k or an IRA, you need to think about what that money is actually invested in. Most retirement accounts are heavily weighted toward stocks and bonds, paper assets that are denominated in dollars. What happens to those assets if the dollar continues to lose purchasing power? What happens if we see the kind of inflation that erodes the real value of your savings? What happens if the stock market corrects significantly, like it has multiple times in the past? Quick aside here, if you're sitting on $100,000 or more in retirement accounts, I put together a free guide on how gold IRAs work. It's in the description below. It covers how you can get physical gold into your retirement account without triggering tax penalties. Worth checking out if you're thinking about protecting your retirement savings. No pressure, just information if you want it. Anyway, back to what's happening in the markets right now. The institutional money is moving. We're seeing major investment firms, hedge funds, and family offices allocating to precious metals in ways they haven't in years. These are sophisticated investors with teams of analysts, and they're making the decision to put significant capital into gold and silver. Why? Because they're looking at the same data we are. They're seeing the same trends. They're reading the same central bank reports. And they're coming to the same conclusion. The risk-reward profile for precious metals right now is extremely compelling. But here's what makes this moment different from other times when gold and silver have rallied. This isn't just about one factor. It's not just inflation, or just geopolitical tension, or just currency debasement. It's all of these things happening simultaneously, creating a perfect storm of conditions that favor precious metals. We've got inflation that's proving to be far more persistent than central banks predicted. We've got geopolitical tensions at levels we haven't seen in decades. We've got debt levels that are mathematically unsustainable. We've got a global monetary system that's fragmenting. And we've got supply constraints in the physical market that are getting tighter by the day. Any one of these factors alone would be bullish for gold and silver. All of them together? It's unprecedented. Let me tell you about what's happening with the ETFs. The exchange-traded funds that hold physical metal. We're seeing massive inflows. Billions of dollars pouring into these funds, which means they have to go out and buy physical metal to back the shares they're issuing. This creates additional demand on top of everything else. But here's the thing about ETFs. You don't actually own the metal. You own shares in a fund that owns metal. There's counterparty risk, there's management risk, there's the risk that in a real crisis, you might not be able to get your hands on actual physical metal even if you own shares in an ETF. That's why more and more sophisticated investors are choosing to hold physical metal directly. They want to eliminate that counterparty risk. They want to know that if everything falls apart, they have something tangible, something real, something that can't be erased with a computer glitch or a bank failure. Now, I want to talk about timing, because that's what this is really about. Why now? Why is this the opportunity of a lifetime, and why is it disappearing in days? Here's the reality. We're at an inflection point. The trends that have been building for years are accelerating. The cracks in the system are widening. The smart money has already positioned themselves, and now the broader market is starting to catch on. When that happens, when the general public starts to understand what's going on, that's when prices really move. We've seen it before. In the late 70s, gold went from $35 an ounce to over $800. That's not a typo. Over 20 times higher in less than a decade. Could we see something similar now? I'm not going to make predictions, but I will say this. The fundamentals today are in many ways more compelling than they were then. The debt is higher. The money printing is more extreme. The geopolitical situation is more complex. And the supply situation, particularly for silver, is tighter. But here's the thing about these moves. They don't happen in a straight line, and they don't wait for everyone to be ready. By the time it's obvious to everyone that precious metals are the place to be, the easy gains are already gone. The people who make life-changing returns are the ones who position themselves before the crowd arrives. And the crowd is starting to arrive. We're seeing it in the data. We're seeing it in the premiums on physical metal. We're seeing it in the delivery delays from dealers. We're seeing it in the buying patterns of both retail and institutional investors. This is what the beginning of a major move looks like. It's not dramatic at first. It's not front-page news. It's just steady, persistent buying pressure that gradually overwhelms the available supply. And then, seemingly all at once, prices gap higher, and everyone's wondering how they missed it. Let me tell you about the psychology of markets, because this is important. Most people wait until they feel comfortable before they invest. They want confirmation. They want to see prices rising. They want to hear their friends talking about it. They want the media to validate their decision. But by the time all of that happens, the opportunity is largely gone. The people who make real money in markets are the ones who are willing to act when things are still uncertain, when the crowd hasn't arrived yet, when the opportunity is still there for those who can see it. Right now, we're in that window. The fundamentals are screaming that precious metals are undervalued relative to the risks in the financial system. The technical charts are showing strength. The institutional money is flowing in. But the general public? They're still largely unaware or skeptical. That skepticism is actually a good sign. It means we're still early. It means there's still time to position yourself before the real move begins. But that window is closing. Every day more people figure it out. Every day more capital flows into the sector. Every day, the available supply of physical metal shrinks a little bit more. And here's something most people don't realize. When the real move starts, you might not be able to get physical metal at any price. We've seen this before in smaller markets. When everyone tries to buy at once, dealers run out of inventory. Premiums skyrocket. Delivery times stretch from days to weeks to months. And if you don't already have your position, you're stuck watching from the sidelines. That's why the time to act is now, while you still can, while dealers still have inventory, while premiums are still reasonable, while you can still get physical metal delivered in a reasonable time frame. Think about what's at stake here. We're not talking about making a few percentage points. We're talking about potentially preserving and growing your wealth through what could be one of the most significant financial transitions in modern history. We're talking about being on the right side of a trade that could define the next decade. The central banks know this. That's why they're buying. The institutional investors know this. That's why they're allocating. The question is, do you know this? And more importantly, are you going to do something about it? Because here's the hard truth. Knowledge without action is worthless. You can understand everything I've just explained. You can see the trends. You can recognize the opportunity. But if you don't act on it, it doesn't matter. The opportunity will pass you by, and you'll be left wondering what could have been. I've seen this happen too many times. People who understood what was coming but didn't pull the trigger. People who waited for the perfect moment, for more confirmation, for prices to come back down. And then they watched as prices ran away from them, as the opportunity disappeared, as they missed out on what could have been a life-changing investment. Don't be that person. Don't let this opportunity slip through your fingers because you were too cautious, too skeptical, or too slow to act. The window is open right now, but it's closing fast. In days, not weeks or months, this opportunity could be gone. The smart money, has already made their move. The institutions are positioning themselves. The central banks are accumulating. The only question left is, are you going to join them? Or are you going to watch from the sidelines as one of the greatest wealth transfers in history unfolds? This is your moment. This is your opportunity. The information is in front of you. The trends are clear. The fundamentals are compelling. All that's left is for you to make a decision. And that decision needs to happen now, while there's still time, while there's still opportunity, while you can still get positioned before the crowd arrives and the easy gains are gone. The opportunity of a lifetime doesn't come around often. And when it does, it doesn't wait for anyone. It's here now, and it's disappearing fast. The question is, what are you going to do about it?